YouTube, hey, hi, how's it going? In today's video, we got a great one for you. What I'm going to be talking about here is the top 5 high dividend paying stocks that I'm considering adding to my portfolio. Some of them already are in my portfolio, but as always, guys, I am not a financial advisor. You want to do your own research into these stocks. If you're interested in investing in them, if you want to pick up a position, do your own due diligence when you're looking at these stocks. Don't just blindly copy someone on the internet. So without further ado, let's jump right in. All right, so right off the bat, we haven't been in the Robinhood app for a while now, but I wanted to show it to you guys what's going on. So over the past day, we're up $119. Over the past week, $270. Now looking at the past month, we're up $802. 3 months, we're up $2,106. And then over the past year, we're up $2,139 at a 14% return. Now, I get a lot of criticism on this channel about my investment style. You know, 14% in this past market isn't as high as it should be. Well, you got to remember, I've been investing over the long haul. So as the stock market's dipping, I'm investing a little bit more, but I'm still putting in money as it gets higher and higher. So my returns might not be as high as the next person. But what I do with this investment portfolio, I focus primarily on dividend stocks. I reinvest everything that gets paid out. So that way it just goes back into the portfolio and I continue buying shares of stocks that I really truly believe in and that I'm going to hold forever. So the goal with this portfolio is to one day retire, have the dividends pay for all of the expenses. And you know, it's going to take a very long time to establish that, but I'm willing to put in the legwork. I'm willing to start the building process, and that's where we're at now. I think what most people can relate to on this channel is I don't have an extremely large portfolio. I don't just dump thousands, tens, hundreds of thousands of dollars into this portfolio. Right now, it's as small as a lot of your guys's, and you know, 17,000 might be a lot to some people, but in the grand scheme of things, it's not a lot when you're towards retirement. So there's a lot of room to grow here. And if you guys want to check out any of the process of my videos, anything that I had been investing in before, everything is documented. That's another thing that's great. You can go back, you can check out any of the videos that I was posting on my channel beforehand. But like I said, in today's video, we're going to be talking about the top 5 high dividend paying stocks that I'm considering adding to my portfolio. So let me just jump right in. And I wanted to lead off by saying that dividends, when they're higher, a lot of times the company may not be doing as well as they once were. So they actually incentivize investors to stay investing in their companies and try and get new investors by enticing them with increasing their dividend to a pretty solid level. So definitely some of these are going to be a little bit riskier plays, but ones that I'm comfortable making, and I say I'm a pretty conservative investor. So that's where I'm at anyways with all of that stuff. So the first one I want to talk about, and one that I'm adding to my portfolio today, is going to be medical properties trust. Now, if you watched a few videos ago, you would know that I think the top 3 industries that are going to perform well in 2021 are financials, are healthcare, and then on top of that is energy and utility stocks. Now, this one is a REIT, which is a real estate investment trust, and REITs are required to pay back 90% of the profit to its shareholders. So it focuses on dividend payments, which is what I love to see. I failed to mention in that video that I think real estate is going to be huge as well because of the huge dip we saw in 2020. I think that a lot of places, you know, weren't getting their rent payments. The prices were driven down, and this has a lot of upgrowth, some potential for the future. And whether you're looking at, you know, a riskier play in real estate, such as going after malls and things of that nature, where you're not really sure what's going to happen in the future, a lot of the landscape of that industry is changing. One that I feel very comfortable investing in is medical properties trusts. And the reason why is because it targets not only the real estate market, but it also goes after healthcare. Because in a nutshell, what this REIT is that there you have healthcare companies out there, you have hospitals that need physical locations, and they rent it from a property like medical properties trust. So this one in the future, I think, is going to be a really, really great value of my portfolio. I wanted to go ahead and buy some today. I have $206. I'm going to be spending all of that on medical properties trust today. So now that I have purchased it, let's talk about some of the details for medical properties trust. And now makes up 1% of my portfolio. One thing about them is that their dividend yield is above 5%. So that's something that I love to see with these high dividend payments. I think most of the ones in this list, if not all of them, are going to be well above that 5% range. And if you look at their chart just over the past 5 years, you know, we did see sort of that COVID dip happening. And that's because a lot of places weren't able, there was like uncertainty in the market. You weren't really sure where it was going to head, but quickly they have bounced back. They're not at pre-COVID levels. I think we're going to get there soon. The price right now is $21.40. You know, over the past day, it has dipped slightly, but it was up as far as 1.21%. This stock is a little bit more volatile than some of the ones that I am investing in, but for the most part, analysts are saying it's a buy right now. You see 92% of them on Robinhood are saying that it's a buy from 12 different analyst ratings. You definitely don't want to just blindly make your decision off these analyst ratings. You want to look online at some of the information. And if you guys were wondering at all, at any point in time, you know, a bunch of different information about investments, one of the best places you can look is actually on the investor relation portion of the websites for these companies that you are investing in. So if you go over, you can go to Medical Properties Trust website and you can find out a bunch of different information here. Now I'd say you want to look up information elsewhere as well, because every company out there is going to try to do their best to get you to invest in their company. So whatever they can do to make themselves look a little bit better, that's what they're going to do to try and entice their investors on their website. Now, some generic information about Medical Properties Trust is they're one of the largest suppliers of those those locations. They have 385 facilities and around 42,000 licensed bed, making them one of the top providers in the industry. So there's a lot of upward potential for them, and that's just one of the very reasons that I thought that this was a very solid one to mention on this list. Now, a few of these, as I had mentioned, were already in my portfolio. I want to touch upon those as well. One of them is going to be AT&T, and if you click into AT&T here, you can see their 5-year trend, it's not looking great. One thing about AT&T though is that they have around a 7% dividend yield. So as it's going down, they're still paying out their dividend payments. And what's interesting about this is that analysts have recently set their price target to be anywhere between $31 to $38 on the high end. I've talked about this in a few videos in the past as well. With the 5G race, everything going on, AT&T has positioned themselves pretty nicely there. I know that there's some budgeting issues that are going on, but the management stuff, everything going on with them, I pretty much like where they are headed. And what's interesting about AT&T is right now, if you scroll down, I have around 68 shares. And every time they pay a dividend quarterly. It actually pays me enough to buy a full share of AT&T. So anytime I receive a dividend payment from AT&T, I just buy a whole new share, gets added to my portfolio, and my dividend payments start to increase. And that's what's really interesting. That's what I love to see. It's super rewarding to have a stock that pays you enough to buy its stock back again, and one that you really believe in, one that you think is going to be there for the long term. So that's what I see with AT&T right now. A very solid pick. And I know a lot of people agree, a lot of people disagree. And the thing about investing, when you're open with your investments online, you're going to get a lot of criticism and you're going to get a lot of supporters out there. Now, one thing I want you to remember about Robinhood investing is that it doesn't do a great job at tracking dividends in relationship to how the portfolio grows. So this 14% growth, so much better than just leaving my money in the bank getting 0.02%. So 14% on its own, super solid. And then on top of that, what you don't see factored into this chart are those dividend payments that Robinhood actually makes, because what happens is those dividend payments act as deposits into your account. So this number would be a lot higher as well if it factored in all of those dividend payments that I was already receiving. Now, there's one company that I want to talk about. I already know I'm going to get backlash for this, but it's Exxon Mobil. Now, again, I'm focusing on high dividend. I'm not necessarily looking so much at the track record, but you can see as I look at the past 5 years, they're not looking so hot as a company, down to 38%. Now, a lot of this is because of consumer spending shifts, especially in the pandemic time. So within the more recently, the past year, where people aren't using as much gas or not needing as much oil, and they're really just hunkered down. So a lot of the spending has decreased significantly for this type of energy. But also, I think that Exxon Mobil is smart and they recognize consumer trends and that we're making a shift towards clean energy, and they've already allocated funds to do that. They're trying to cut carbon costs. They've got money going into different places. They're also completely restructuring their company. They're cutting jobs. They're trying to figure out how to maintain their dividend. It's looking like they're doing a decent job right now. And I, for one, I really believe in the management structure and how they've handled the company in the past. They're a huge player, and I don't see them going away anytime in the near future. So if you can capitalize on some of the dividend payments, and if I scroll down in the Robinhood app, it listed well above that 7% range. If you can capitalize on that, you have thick skin, there's still potentially some money to be made in terms of growth here. If they're able to successfully shift, they figure out how to allocate funds in the right manner, and they figure out how to kind of bring back this dying stock. Especially, I think that they're on the right track by focusing on that dividend payment, then we're going to see some solid growth potential in the future. Now, again, this one is definitely riskier. I would weigh your own, pros and cons towards going into this one, but this is one that I wouldn't be surprised if I put out a new video on Exxon Mobil and I started adding them into my portfolio in the future. Now, on the topic of controversial stocks, let's talk about Altria. If you don't know what Altria is, essentially it sells tobacco products and cigarettes, things like that. So not necessarily the most moral company out there, but when you're looking at investments, you really got to break it down, look at the financials, and weigh, your moral compass where you feel comfortable putting your money. Now, why I'm okay with Altria is because of how their company's been established, their management style, everything that they've been backed. Even looking at their track record, like looking at the past 5 years, again, they're on the decline. This is very similar to Exxon Mobil. I think this industry as a whole is starting to decline. People are living healthier lifestyles, are getting away from a lot of this stuff. But one thing to note is that really high dividend yield of 8.13%. And unfortunately, though it would be great, this stuff isn't going away anytime soon. People are going to still be buying cigarettes. They're still going to be needing their tobacco products. And in terms of, just having a stable dividend income, Altria looks really enticing. And the thing about Altria is they've got really great management style, but you got to keep in mind they have been on the decline. So Altria's earnings rose 6% slower than the 18% gain in 2018. And then for 2020, the earnings are expected to decelerate to around a 4% increase from there. So a company that's, starting to go down, it's one that you're definitely going to want to weigh your options on, keep your eye on, because there is still growth potential with them. But this is one that for a while now has been on the decline, and it might be a decent time to consider adding this to a portfolio. One thing worth noting about Altria and about its dividend is it's been increasing it for a very long time now, well over 50 years. And if you are increasing your dividend payments for over 50 years, you are considered a dividend king. And if you want to get a list of all the dividend kings, I'll have the link to that in the description. But I use a website called suredividends.com to view those lists. There's dividend kings, there's dividend aristocrats. You can sort by a whole different variation of these lists that you might be interested in reviewing. But this is where I go for a lot of those stocks when I'm wondering, what might be a decent one for me to buy as a dividend investor. I kind of start looking at the dividend kings and dividend aristocrat lists. So if you're starting from square one, that might be a very good start for you. Now, you already know I said that I think financials are going to be huge in the year of 2021, and we've already started seeing that rebound. So if I look at the trend for something like Prudential Financial over the past year, they're almost now back at that pre-COVID price. Now, back when I made that video, the financial industry was a lot less, but I thought I'd be remiss if I didn't put on this dividend list at least one financial company. Now, I really like JP Morgan as a pick for a financial company, but this is Prudential Financial. And if you don't know much about them, well, their dividend yield is up to 5.33%. And what we saw from a lot of these financial companies is that during the pandemic, during all this stuff, they had to allocate funds assuming that they were not going to be paid back on loans that they had given out. So it's sort of like a loan forgiveness type program where they needed to take money out of their accounts, out of their earnings, their potential revenue, and basically set up like an insurance policy, I guess, essentially just assuming that they weren't going to be able to make this money back. Well, as you can see how the market reacted, it bounced back so much quicker than ever anticipated during this dip. And because of that, a lot of these people are able to continue paying. A lot of people, had lost jobs. The unemployment rate shot up, and then it started going down pretty rapidly. It's still relatively high, but a lot of people were able to start making back those payments. And a lot of these financial companies that have this unrecognized gain on their balance sheet are going to have to start moving that back over to that recognized gain category. And because of that, I think not only will the dividends from something like Prudential Financial be really instrumental in the growth of this company and the growth of your portfolio, but you could potentially then get returns on top of those dividends much higher than you'd see from other traditional investments. So that's just something to consider. Prudential is one. It's not in my portfolio again. I may add it in the future, but I just wanted to make sure that I got a financial company here on this list. And right now, that's the top 5 high dividend paying stocks that I'm looking at, the ones that I'm considering, and some of the ones that I'm already invested in. So if you guys have any questions about any of these, just make sure you leave them down in the comment section. I try to get back to every single one of you. Again, the continued support on this channel has been amazing. If you made it this far into the video, leave me a like. It would mean a lot to me. Just turn that button blue. That would be great. And thank you so much for checking out this video, guys. Have a great day.